What's going on, everyone? Bryant here, and today is Thursday, September 17th. I got a lot to show you guys, some important information. This video is going to be mostly focused on the broader market. So what we're looking at is the S&P 500, the SPY, ETF. We're in this bear flag pattern that's forming, and we've been consolidating just slightly above the 50-day SMA. It's been an exhausting week so far, so I don't know how you guys are holding out, but I have something very important to show you guys in a trade I took today in the futures based on how I was reading volume. I'm starting with the SPY because most of you guys are probably more familiar looking at this chart, but let's switch over to the ES, which is what I was actually looking at. This is usually where I start my day. This is the same daily chart, just in the futures for the E-mini S&P 500 contracts. So coming around 7:30 this morning, I drew out what looks like the lower end and the higher end of the flag, and I started thinking, before the market opened, we were actually all the way down here. I started thinking about how bad could today become if we ended up continuing to sell off. So I started by looking at the past consolidation zone, and I drew out this volume profile, and I saw that the point of control was here. So I marked this level off in case we ended up falling. I wanted to have an idea for where the market could potentially bounce. Now that aside, I decided to take the volume profile and draw it out to the price action prior to today's open, prior to the price action from today. And I noticed that the point of control was actually right here. So that's where you guys see this yellow line is on the chart. I'll show you guys. Let me just remove this, drag it back over here. That's what this yellow line is right here. It's the point of control based on the price action dating back to the breakout from July all the way into today. And that was something that was significant because I figured if the market bounced, we would probably get a short trade at that level. Now, coincidentally, if I just zoom out, just going to pull back, and this was the all-time high back in February before the coronavirus pandemic outbreak. And as we can see, as I move my mouse, you guys can see that that level actually lines up right with this point of control. So that was a very, very key level to pay attention to. Now, jumping back to the SPY, let's take a look at some of the market internals. I've talked about the ADD VIX, which is the Fear and Volatility Index, as well as comparing divergences between the SPY and the NASDAQ. The NASDAQ mostly represents tech stocks, where the S&P 500 represents the broader markets, 500 of the largest companies in the US. A playbook trade for me, which I saw happening, but I was not interested in taking. I wanted to come in only looking for a short setup today. I didn't want to take any long setups. I ended up taking a very small scalp, but it was insignificant, so I won't really talk about that in this video. Now, let's start by looking at a closer look of the VIX. This is very interesting to me that the VIX had gapped up tremendously. I mean, it gapped up over 2 points, and by the time the market was getting ready to open, we were actually up over 2.7 points, which is very significant considering the way the VIX has been trading. It does seem every time we get down to 25, it does end up consolidating. That's what happened a couple weeks ago and how I was able to spot that short. But right before the market opened, we saw the volatility was really starting to pick. We saw that the VIX was really starting to pick up. Now, whenever the SPY gaps down into such a major support area, in this particular case, the major support area that I'm talking about would be this line right here. It is the 50-day SMA. Let's look at it on the daily time frame. That's this level right here. For those of you that don't know, the 50-day SMA and the 200-day SMA are very significant levels on the daily time frame. So knowing we were gapping down into this level, usually I do look for some sort of a bounce trade or some sort of opening drive trade to the long side, but this morning I did not want to take it. Looking back at the SPY intraday, let's actually just pull out. I want to show you guys something. I want to show you guys the ADD. As you guys know, I pay very close attention to this also. The ADD gapped down to this very significant zone. If you guys saw in my very first video, I've mentioned where I get these levels from. If you just look back at the 10-year weekly chart on the ADD, you see that these are very significant levels. The plus 1600, the minus 2000, the minus 2800. We usually always get some sort of a reversal dating back for the past 10 years, and that's why this is pretty significant. Now, if you guys are really interested in an opening drive momentum play, I would say watch out for this playbook trade. Whenever the ADD gaps down this significantly, you can get a bounce, but usually it's not just any random day. You want it to be on a day in which the SPY has gapped down tremendously. If we pull this up again, make it larger, from yesterday's close to today's open, the SPY was down 5 points, 1.5%. That was pretty major. But what's even more significant, if we look at the futures, we actually moved the full range of this flag from here to here overnight. Looking at the hourly time frame, we can see the same red lines here. That's this line up here and this line down here. This was just before yesterday's close. This is at 3 p.m. yesterday, just after the Fed announcements, where we had that pop and then we had straight selling pressure all the way down here. That's the full range of this pattern. So you can expect a bounce, but again, I was not looking for that trade this morning. It took a lot of discipline not to take the long setup. I'll show you guys why very shortly, but for now let's continue with the analysis of the overall broader market. I'm going to turn pre-market data on for a quick second because I did look at this morning. It was something significant. I saw this trend forming right here, and looking at the NASDAQ, we're going to do the same, just turning pre-market data on and drawing out the same trend. This will come in a little handy shortly. Another thing to point out was that the NASDAQ was actually way below the 50-day SMA, unlike the SPY, which as we can see was actually acting as support. That meant that the SPY was relatively strong in comparison to the NASDAQ, or that the NASDAQ was relatively weak in comparison to the SPY. Now, disregarding this trend for a quick second, we're going to turn pre-market data off again, and then the next thing I always look for is usually some sort of gaps in the chart, and I do like to draw a visual. If we look back here, we'll see that from here to here we did have this gap, so I do like to draw that out just so I can be aware of and I won't miss that type of price action when I'm very zoned into what's happening intraday. The trend line won't align because now the pre-market data is turned off, so for consistency I'll just turn that back on for you guys. And here we go. So before the bell rung, remember, all this price action had not happened. I was just seeing this and I saw some sort of a bounce coming. Now let's just switch over to futures, which is actually the instrument I use to execute my trades. So this is our ES chart and this is our NASDAQ chart, the 15-minute time frame. So this video doesn't get too long. I'm not going to spend too much time on the NASDAQ, but I will just point out to you guys the trend line. Here's what it looked like on the NASDAQ 15-minute time frame. I did see that we were actually oversold also, but I wanted to focus on the ES today. So let's switch over to that. Here's the ES 15-minute time frame. And let's just zoom into today's price action. This dashed line right here is 9:30, just as the bell rung. And here's what I was looking at. We saw this bounce right here. I did notice that we were oversold. So I'm pointing out signs that you can look for if you're looking for a bounce play. An oversold on the RSI, on the futures, in conjunction to the ADD gapping down tremendously, the SPY gapping down, as well as the full range gapping down. You can expect a bounce. These are all signs. These are all things from a playbook trade of mine for whenever I'm looking for a bounce play. So I'm just sharing it with you guys and hopefully it'll help you in the future. Taking a glance at the 15-minute time frame, the next thing I usually like to do is then draw out my Fibonacci's from the previous day's high to the low. And one thing I want you guys to spot right here is this 50% retracement in conjunction with this line over, in conjunction with this resistance over here. Let's actually switch over to NinjaTrader so I can draw out the same Fibonacci and you guys can see from here to this would be our low. I'm just going to drag this over here. You guys see the 50% retracement. Now you guys know what this yellow line is. This is the point of control from July's rally in the market where I showed you guys at the beginning of this video. So this whole area right here, I'm just going to draw this out. So we have an area. Let me just change the color. There we go. So we'll delete this so there's not too many things on the chart. This area is where I was looking to get short. And now you guys can see how you can have multiple confluences. It's a 50% retracement. Bearish setups are currently working in the market conditions that we are in right now. Here's a very significant point of control. It also lines up with price levels that show support and resistance on the chart. This is the hourly time frame. It doesn't really matter what time frame you would be looking at. You would see the same point of resistance here. Switching back to Thinkorswim, you guys can see how this lines up beautifully. Now into the important part of this video. We have already the volume profile, which I really want to talk to you guys about, paying attention to volume in the charts. Now let's actually switch over to a tick chart, which is what I will use on days like this where things are extremely volatile and I want to get in with the least amount of risk as possible. This is our tick chart here. Same Fibonacci. Let me just zoom out so you guys can see. That's yesterday's high straight to the pre-market lows. Here's our 50% retracement. And I'm looking at the 1600 tick chart. I experimented with multiple different tick charts before. I ended up just using the 1600s. It's one of the defaults in Thinkorswim. There's nothing significant, at least that I have found about it. It's just convenient for me. I do like the way the candles end up printing. For those of you that don't know, the tick chart just means every candlestick represents X amount of transactions. So in this case, we're looking at a 1600 tick chart. That means each candlestick represents 1600 transactions that happened. Now, why I like the tick chart is because it's pretty easy to spot anomalies in volume. I'll repeat that again. Why I like the tick chart is because it's fairly easy to spot anomalies in volume. A tick chart, if you guys notice, down here in the gray shaded area is my volume. Each candlestick generally is equally weighed when it comes to volume because it's 1,600 transactions, or again, it doesn't matter what tick chart you're looking at. If you're looking at a 1,000, a 2,000, a 333 tick, each candle will generally have the same amount of volume. Whenever you catch anomalies like this becomes very important. But before I get into that, I did mention how hard it was to actually sit back and not take any of the long setups. I will show you guys why. Now, you guys know about how much I love my fibs, so I just want to show you guys from here to here. I recognize this just as the bell rung. Here was our 50% retracement, and we had this little double bottom on this 50% retracement before we ran up and hit this PT. I did not participate in that, even though I was watching it. Next, we had this from here to here. Let's just drag this up. I'm taking this recent swing low. This again will take a little bit of experience if you're not used to trading the Fibonacci, but generally what you want to look for is wherever you had a new swing low. This would be considered the swing low because it took out the previous swing low, and then I'm just going up to the swing high, ignoring these areas because we didn't puncture the previous level. We're still running up here. A little bit of experience, a little bit of discretion. Sometimes it's a little bit different. Sometimes I will pay attention to wherever there's volume spikes, as well as whenever I'm looking at the tick indicator, not to be confused with the tick chart. This is the tick indicator. I'm not going over this in this video. I've mentioned it in my first video. You guys can go back if you need any tips on this, but certain spikes like this, so 10, 11 is when we had a spike in the tick chart. Let's go back to our ES. So you can use that to anchor to certain levels on your chart if you're trading the SPY or the ES. Again, it's not what this video is not about the tick indicator. I just want to show you guys something very important here. Now the next swing high to swing low, let's just move this. Here goes our swing low. We had this swing high right here, another good area to go long, and we did hit the full PT. Now these ranges are very beautiful from a risk reward standpoint. We're talking about from here to here. This is only a 1.5 stop with an opportunity to gain almost 8 points. The previous one would have been a 1 point stop again to potentially gain 7 points, and so forth and so forth. So it is really nice when the market is moving like this. This is something to pay attention to because it will really help, but it mostly takes you understanding which direction the market will end up going for whatever time frame in which you're trading. And lastly, let's just move it along and go from here to here. We see it never came back into the full 50% retracement. I generally just keep trailing it until I see some sort of 50% retracement until we get one. Now let's actually delete this because we're going to come back to our fibs. I'm going to zoom out now. I was just watching and waiting until the market came up to the level I was anticipating it to be a good short entry. Now it took everything in me not to just enter this short. I cannot tell you how badly I wanted to get ahead of this moving train. You guys have to remember the market was just flying at this point. If we look at it on the SPY, this is what the price action looked like on the SPY. It was just gorgeous. We had cracked this downtrend, and that's when I was expecting us to keep running, at least to hit my level on the ES. We were in this gap zone, which means that price action would move pretty quickly through this level. We had cleared a lot of pre-market levels, and we just continued to fly. Watching the SPY, I was also watching the Qs, made it very nervous. You start doubting even a beautiful setup. You start doubting even a play that I had been sitting at this point. I'd been watching almost an hour and a half wanting to take a trade, so it does make you want to jump the gun. Looking back in hindsight, it still would have been a good area to actually scale in. Because of how erratic and volatile the market has been, you do need to be very careful. So what I did is I just continued to be patient and watched and watched. The next thing I naturally do, which you guys should know by now, is just draw out my retracement. So from here, I just continue to trail it down until right here. Sorry, let me just hide that for a second. I want to show you guys this. I saw this. That was the volume that really caught my attention. You guys see how easy it is to spot these spikes in volume when you're looking at the tick chart. So we had this level. We had this level here. Let's actually just zoom out again. Zoom back in. So we had this spike right here. So what I'd like to do is draw a rectangle around that level so I don't miss it. And now let's zoom in up here. And whenever I see this type of spike again, I take note of what type of candle it was. It was a little bit of a spinning top, a little bit of an indecisive candle, but I read it as bearish. Now I read it as bearish because at this point things were not looking pretty healthy on the SPY as well as the ES. I had this larger thesis at my back, knowing this is the point of control, knowing this is the 50% retracement. That's when I drew out my fibs, ignoring the wicks and just coming down to here. And I've generally noticed whenever you get something that looks pretty bearish, if you just wait for a bit, you'll usually always get some sort of random pop. I didn't want to get ahead and get into this consolidation zone, but I was also fearful of getting in at the break and not getting the entry in which I would have liked. So I just waited a little bit longer. I saw another spike came in right here, and that's when I finally felt really good that we were going to get this short that was coming back down to this zone, but still waiting, expecting there to be some sort of pop or retracement. As you guys can see, we didn't get the full 50% retracement. So what I did is once we pushed up here and failed, I got in once we fell below this level, knowing I could put a stop above this level, and I felt pretty comfortable in the trade. Now this chop right here felt like eternity because I wanted a much quicker reaction, and I did not scale in, which is something that I need to improve on because it was a great theory. I saw the wick rejections that were coming in, so I had a lot at my back, and this was an opportunity to definitely scale in. I'm talking adding anywhere up to 5 to 10 more contracts. I decided to trade the micro futures today and not the actual ES, meaning each point is only worth $5. If we look here, what was I risking? The moment we got back below here, let's actually switch to NinjaTrader and just see what my entry is. Yeah, up here. So I got in right when we got the wick rejection. This is the 5-minute time frame for NinjaTrader. I generally will have the 5-minute time frame, but again, I wasn't even really paying attention to this chart. I was basing my trades off of the TOS tick chart at the time. I just switched over to NinjaTrader just to put the order in, and switching back to TOS, as we can see, we had a nice flush. I do want to point out that this was VWAP, so I was aware of that. I got out just below VWAP. VWAP was down here. I ended up closing the position just here. I didn't want to wait for it to get all the way down here because, as you guys also know, I generally do like to take profit at these levels, but I wasn't in large enough to scale out. So I just went flat here, just trying to lock in some profits. But this trade ended up working out even larger than I expected. We hit this level, put in another flag, and then cracked. I did not enter in here. I just sat on my hands until the last few minutes of the day. I was actually very tired because we sold all the way back down here, and that actually surprised me. I didn't think we were going to get all the way back down. The 50 SMA on the 50-day SMA was still at this level. So at this point, the ES, the SPY is having multiple touches on the ES, so it's starting to look pretty heavy here. As you guys can see, volume really spiked during this area and it was very choppy. I saw some decent entries to take. I didn't want to take them again. I ended up just meditating for a second because this was taking a lot of mental capacity, just observing, not even taking these trades. Towards the end of the day, I did see another trade that I wanted to take. So let's just extend this out for a second. Boom. And then let's actually make this red. You guys know I like my charts to be pretty aesthetically pleasing. And there we go. I saw when we came back up to this level, usually this is a very nice short. I did not take. I was watching the tick chart at the same time frame, but at this point I was so tired just watching this chop here. I didn't even feel like taking another trade at this point. I needed a little bit of a break. But as you guys can see, this would have been another great opportunity to get short, and the risk reward on this would have been stop over here, call it over this level. Give it 3 points or so. You can get a 3 to 9. That's a 1 to 3. In this case, you would have gotten 18 points out of it. Probably a good PT probably would have been here. So call it 14, 15 points. You could have gotten it. Risking 3 points to gain 14 is a great trade, especially when you're taking the trade in continuation of the trend. We know the volume, we know what happened with the volume from earlier. This was a great level here. But at this point, I was thinking about there being some sort of a long setup. And lastly, I'm going to close the video with showing you guys why I like to wait for retracements. This is very important information and just an observation I've picked up on in my time of trading. Whenever you get such a key resistance, you don't need to take the first break. The first break will usually have some sort of a pull-in, and you want to try to get that retracement. Unless you're a scalper and you're just going in for this 2-3 point scalp, which is not a bad trade. You can take this. But if you're looking for more of a bigger trade, it's almost always better, in my experience, to wait for the retracement. a limit order in on this break, and I put my stop here just below this. I ended up trying to catch the momentum, expecting there to be some sort of squeeze at the end of the day instead of waiting for my playbook retracement, and I ended up paying the cost. Again, it was a small stop, but I just want to show you guys. I'm going to ignore this wick here and just move this up here, and you guys can see this pull in. It wasn't a full 50% retracement, but this whole area, if you have conviction that we're going to continue, if you have reasons to believe in this, certain other indicators and things like that showing, and you're expecting a trade to go in your direction, you don't necessarily have to wait for the full 50% retracement. You can scale in here, you can add here, and then you can definitely add in this area. And as you guys can see, I'm going to close. Let's delete the previous fibs. We did end up getting this PT, which was hit, and then the next one. And I was a little bit upset that I got stopped out because I tried to take the momentum break instead of waiting for the retracement, in which has shown me usually ends up paying off. And if the trade continue to go, it's in my experience better to just let it go and wait for the next retracement. So that's my recap. The main lesson was how to use volume profile from a larger time frame, in conjunction with understanding what's going on with the market, knowing your levels, and then using the tick chart, paying attention to the volume on the tick chart to spot very key levels. I really hope this one helped. There's a few other things I wanted to point out, but I might save it for a weekend recap. And if you're new to the channel, make sure to hit the subscribe button down below. Leave a comment. Let me know what else you guys would like to see on this channel. I'm enjoying releasing videos a little bit more frequently. It definitely does take time to edit, but I've got the turnaround time to be a little bit quicker for myself, and that's why you guys are seeing more frequent uploads. Don't forget to share this video, and thanks for watching. See you on the next one.